Hi, I'm Mark with Best of Us Investors. I've been investing for over 40 years. I'd like to share some of my knowledge with you today. Now, I'm not here to tell you what to do, but to just give you some ideas that may help you become a better investor. Remember, this is not financial advice, it's for education purposes only. If you like the content, please hit the like button and also subscribe. That'll help out the channel. Thanks. Now, let's get going. A few days ago, an alert came up on my computer system and it mentioned one of the companies that I've held for a long time. And it's a company that is in the class of business development companies. And a business development company is something I use in my portfolio to create income. It's usually a higher yielding company, similar to a REIT. So the one I want to talk about today yields me currently about 8.5% annually. So let's get started on business development companies. So the alert that went off in my system brought me to this story by Kiplinger. It's called The Five Best BDCs or Business Development Companies to Ride Out a Risky 2022. Business development companies, BDCs, are small but sky high yielding industry that effectively acts as a private equity for the common man. This story flagged one of my favorite long term stocks, and that's why it flagged up on my alert. So we'll continue on. Wall Street received a painful reminder this year that the stock market isn't a free money machine. Stocks don't always march higher, and the risk of declines, if perhaps only temporarily, are very real. Dividends, however, allow you to realize consistent cash returns and avoid the need to sell at inopportune times. But few areas of the market produce higher dividends than business development companies or BDCs. It goes on to say that business development companies are like private equity funds for the common man, though they have some important differences. Whereas private equity funds tend to be opaque, have long lockup periods, and are restricted to high net worth and institutional investors, BDCs are publicly traded on the stock market and are completely transparent. Now, I've owned business development companies as my core investments for a long time, and one of the companies mentioned in this story is one I've owned for a long time, and I really like it. We'll get to that in a bit. But I got into business development companies because I like the yield. And I also use it as investing in what I call my small cap companies. I don't have to invest in a fund that invests in small cap companies. I actually invest in a company that invests and owns and or partially owns companies that are small and mid-term caps. So let's move on because I believe this article did a good job of explaining simply what a BDC is. So BDCs make debt and equity investments primarily in middle market companies that are generally a little too big for bank financing, but not quite big enough to go public via an internal public offering or an IPO, initial public offering. They invest in the proverbial Main Street, or at least this is as close to Main Street as Wall Street gets. Main Street suffered much more than Wall Street during the pandemic, so it's not surprisingly that many BDCs entered 2022 below their pre-COVID prices. Their cheapness relative to the rest of the market makes them attractive, particularly given that the BDCs are also some of the highest yielding stocks you're going to find. Like their cousins, the real estate investment trusts, or REITs, BDCs were created by Congress to encourage investment in the real economy and both benefit from preferential tax treatment, paying no income tax at the corporate level, so as long as they pay out at least 90% of their net incomes as dividends. This is why BDCs and REITs generally have such high dividend yields. They're legally mandated to pay out nearly every red cent, and the absence of taxes makes cash available to pay. Now, the article goes on to list 5 different business development corporations, but the one I want to focus on is Ares Capital Corporation, symbol ARCC. So let's dig into Ares Capital a little deeper and see why I like it. But before we get too deeply into Ares Capital, let's continue on with what Kiplinger has to say about Ares Capital. Ares Capital is the world's largest BDC by market capitalization with a value of roughly $10 billion. It also happens to be one of the most conservatively allocated. 47% of its portfolio is invested in first lien loans, with another 23% in second lien loans. Only 21% is allocated to equity. So first lien loans means you get paid first in case there's an issue with the company you're invested with, which it says right here. Ares is also very well diversified by sector. Software makes up 22% of the portfolio, healthcare and professional service 11% and 9% respectively. No other sector accounts for more than 7%. ARCC slightly lowered its quarterly dividend during the worst of the pandemic, but has since started raising it again, and in fact is now back to the pre-pandemic level of 42 cents per share. Better still, the company announced a 3-cent special dividends to be distributed throughout 2022, which boosts the yield from a stated 8.2% to more like 8.8%. So that's one of the reasons I like this. Is I like part of my portfolio in income producing or dividend yields, bringing in income. I'll either have it reinvested into the company or I'll have it delivered to me in cash so I can invest in other areas. Let's go over to Seeking Alpha and we'll do a little research into the company itself and give you an overview. So we go to company profile. Harry's Capital Corporation is a business development company specializing in acquisition, recapitalization, mezzanine debt, restructurings, rescue financing, and leverage buyout transactions of middle market companies. It also makes growth, capital, and general refinancing. It prefers to make investments in companies engaged in the basic and growth manufacturing, business services, consumer products, healthcare products and services, and information technology service sectors, and we'll go through those a little later. The fund will also consider investing in industries such as restaurants, retail, oil, and gas, technology sectors. It focuses on investments in the Northeast, Mid-Atlantic, Southeast, and the Southwest regions from its New York office, the Midwest region from its Chicago office, and the Western region from the Los Angeles office. It typically invests between $20 million and $200 million and a maximum of $400 million in companies with an EBITDA between $10 million and $250 million. It makes debt investments between $10 million and $100 million. The fund invests through revolvers, first lien loans, warrants, unitranche structures, second lien loans, mezzanine debt, private high yield, junior capital, subordinated debt, and non-controlled preferred and common equity. The fund also selectively considers third-party led senior and subordinated debt financing and opportunistically considers the purchase of stressed and discounted debt positions. The fund prefers to be an agent and or a lead in transactions in which it invests. The fund also seeks board representation in its portfolio companies. So basically, I call this company a venture capitalist corporation that I'm a shareholder in because it goes to middle market companies that may have trouble getting loans from a bank or not big enough for an IPO. And Ares Capital will provide them with capital to fund their growth or support their debt. They'll either take a direct position in the company and or they'll just take a loan or a lien out on the company, more like a bank. Let's go down and look at revenues. I always like to see growing revenues year to year. We'll start with 2017, 1.16 billion in revenue. 2018, 1.34 billion in revenue. 2019, 1.53 billion in revenue. 2020, 1.51 billion in revenue. 2021, 1.82 billion in revenue. Then they estimate out 1.97 billion in 2022 and 2.07 billion in 2023. So the company's growing revenue each and every year, which is always a positive for me. So when we look at earnings per share, I always like to see continuing growing earnings per share. Q4 of 2020, the estimate was 40 cents. The actual was 55. 2021, the estimate was 42. The actual was 43, so a beat. 2021, the estimate was 42 cents. The actual was 53, another beat. Q3 of 2021, estimate is 45. The actual is 47, another beat. Q4 of 2021, estimate is 56. The actual is 58, another beat. So at least over the last 5 quarters, you can see that the company has beat its estimates. Another plus for me. As we move down to capital structure, the market cap is 10.47 billion. Total debt's 11.16 billion, where you can see the cash is 3.72 billion now. These companies are like banks. They're loaning money. They borrow money to loan. They borrow at a lower interest rate and charge a higher interest rate to who they're loaning the money to. So this is not unusual. The enterprise value is 21.25 billion. If you go down, you can see the volume 2.66 million, a good volume on trading data, and the shares outstanding are 488.8 million. I always like to go back up to the enterprise value, which is to me the breakup value of the company, what the company's worth, and go down and divide it by uh, the shares outstanding. And if you take 21.25 billion and divide by 488.8 million, you get a share price of a breakup value of $43.40 each, which is pretty good. Over here, the dividend yield, 7.91%. It's paid quarterly, and you see they just paid one out in March. Latest dividend announced is 42 cents. This company allows you to reinvest back into the company, so as the price goes up and down, your dollar cost averaging and reinvesting in the company, increasing your shares. When we look at dividend growth history, I like to see at least a growing or stable growth history in dividends. 2011, annual dividend was $1.41. 2012, $1.60. 2013, $1.57. 2014, $1.57. 2015, $1.57. 2016, $1.52. 2017, $1.52. 2018, $1.54. 2019, $1.68. 2020 during the pandemic, $1.58. 2021, $1.57. So you can see if you get into this company long term, you're going to have pretty stable dividends. Let's look at ownership. The institutions own about 30% of this company. Insiders about 0.5%. And public and others, people like us, own 70% of this company. Here's your competition: Apollo Investments, Main Street Capital, Golub Capital, and 6th Street Specialty Lending. So you can see down here, the market cap for Ares Capital is over $10 billion. Apollo is $842 million. Main Street, $2.98 billion. Golub Capital, $2.61 billion, and TSLX, $1.78 billion. So Ares Capital is the largest business development corporation among its peers. So as of right now, Ares Capital, as of April 12, 2022, is trading at about $21.20. The one thing I like about this stock is you're not going to get much variation on the share price, maybe within a $5 range. What you're in for it is for stability and for the income. So let's take a look basically at the last 10-year chart. So this is the last 10-year chart. You can see over 10 years the stock price has increased 31%. Okay, that's definitely not a growth stock. We can go back and see that 10 years ago, the stock was at $16.05, 2012, 2013, $17.90, around 2014, $17, 2015, $16.50, 2017, $17.51, 2018, $16.74, 2019, $17.44, and then of course we had the pandemic. It dropped down to $10.78, and since that time, it's now trading at one of the highest, $21.23. So that's one of the things I like is I'm not going to get much variation of the stock price, so I really don't have to worry much. And if you have your dividends reinvested, you're going to see they're going to be reinvested pretty much between the $15 and the $20 range. So it's a good stock for me to build wealth and or build income. Let's take a look at the portfolio composition of what Ares Capital has. When you look at their debt, they hold the first lien senior secured loans in 47% of the companies and second lien senior secured loans in 22%. So they're almost 70% senior loans. What this means is if the company that they invest in goes bankrupt, belly up, can't pay, or gets into trouble, Ares Capital is first in line to get paid back. You look at industry composition here. We look at software and services, 21.9%, healthcare, 10.8%, commercial and professional services, 9.2%, financials, 7.5%, insurance, 5.8%, senior direct lending, 4.9%, capital goods, 4.8%, automobiles, components, 4.6%, power generation, 4.5%, consumer durables and apparel, 4.4%, consumer services, 3.9%, and on and on. you can see that when you invest here, you're going to be fairly well diversified in their portfolio, and diversified also by region: West, Midwest, Southeast, Mid-Atlantic, Northeast, and even some international. We scroll down and we see the portfolio of investment companies. This is something you can go to their website and see. You can see they invest in a lot of companies from all different commercial and professional services, healthcare services, aero operating, provider of snow removal and melting services for airports and marine terminals. You can go down, you can see here's the company. It's a specialized insurance broker, provider of outsourced security guard services, outsourced facilities management, just all types of companies. So you're an owner and or lender to many companies within the country. So basically, you're helping small companies grow and become more prosperous, which helps the whole country out. You can see there's plenty of companies. You got more here. Anyway, there's a lot of companies you can go through and see exactly what you're investing in. You can see the type of investment and senior secured loan, senior subordinated, equity if you're part equity, part owner, and then the industry. It's a very good resource to go and see what you're actually invested in. So kind of in summary, Ares Capital is the largest business development company. Annual shareholder return since the IPO is 13%. Total investments over $20 billion, 387 companies in the portfolio, and a market cap of over $10 billion. So I've been a long-term investor in Ares Capital. I purchase the shares, the dividends come in, I just reinvest them. And sometimes when I see the price go down, based on my metrics, I will buy more Ares Capital, but it's a long-term holding. It's the largest BDC, has a conservative portfolio, mostly has first lien positions. It's growing revenue year over year. It's growing EPS year over year. It has stable and growing dividends over time, and it has good trading volumes. This is a company that I like. There are several BDCs out there, so do your own due diligence and find the one that you like. This is really a good company for me for just income and building up more equity in a company. I hope you enjoyed this video on Ares Capital and business development companies. Remember, this is not financial advice, but just some information that may help you become a better investor. So please hit the like button and the subscribe button if you enjoyed the content. So remember to know what you are buying and why you're buying it. And also don't invest in hope. Hope is not a strategy. Until next time, thanks for watching.